apartment supply ramps up in Denver, you'd expect to see rent growth levels cool off a little bit, but just the opposite is happening in the Mile High city. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Denver update. Denver is in the midst of its biggest apartment building boom since the early 2000s. The first big wave of these new properties underway has started to complete in 2013, with supply totaling nearly 5,000 units, and that number will more than double in 2014, more than 10,000 units scheduled to complete. So typically you start to see apartment operators begin pricing units more conservatively to get ahead of new supply entering the market, but not in Denver. Operators are ignoring that conventional wisdom, and perhaps wisely so, given the strength of demand in this marketplace. Same-store rents for new leases jumped 7% in 2013. That put Denver in a tie with San Jose for the #1 spot in the country. And what is perhaps most surprising is that, well, nationally we've seen rent growth levels cool off a little bit as supply has picked up. In Denver, that 7% number is a new peak for this cycle. You could see that over the past few years, Denver's been pushing rents 5, 6, and close to 7%, but this number from Q4 2013 marks the new high. A big part of the story is the type of product pushing rents most notably. Take a look at this chart showing year-over-year rent growth by year built, and you can see, with no real surprise, the biggest hikes are coming in apartments built in the 1980s, 70s, and earlier. Very big hikes fueled by a few vacancies and little threat of losing renters in that type of product to the newly built and more expensive apartments. But look at the 2000 plus segment. While lower than the rest, it is still quite strong, 4.9% year-over-year rent growth, a very significant increase and quite significant given the large stock of new development in this market. And these units are the ones that tend to compete most directly with the new supply entering the market. And when we look at rent growth by submarket, we find rents up around 5% or more in 17 of the 20 submarkets that we track. So the rent hikes are remarkably widespread. And here are the top 6 for 2013, and they're spread out across the metro, no clear pattern geographically. Parker Castle Rock on top at 11.5%, then Longmont, South Denver, Englewood, Thornton, North Glen, and then 2 Aurora submarkets. Now, the majority of the construction in Denver is really concentrated in 3 key employment centers: Central Denver, Broomfield, and the Tech Center. You can see about 1,600 units underway in both of the latter 2 submarkets and nearly 4,000 units underway in Central Denver. Yet rent growth is still good in all of these spots. Only 3.7 in Central Denver, but that's still very solid, and 6.5% in the Tech Center, 8.8% in Broomfield. Now, one big reason for the rent hikes we've seen everywhere is the fact that vacancies are low across the board. Overall occupancy as of Q4 came in at 96.2%, up 50 basis points year over year, and a strong economy obviously is helping fuel a lot of the demand in this market. And Denver is banking on that continuing in 2014, and that shouldn't be a problem considering that economists remain bullish on this market going forward. But with 10,000 units completing, occupancy is almost certainly going to drop off about 100 basis points. Rent growth will likely cool off some too, but we don't think that cool down will be all that dramatic given that the biggest rent hikes are coming in the middle-aged and older apartments of late, and they should continue to be able to post big hikes given that they're not competing with that new supply underway. So overall for Denver, we are forecasting rents to climb 4.2% in 2014, which would keep Denver among the U.S. leaders. And that wraps us up for Denver. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.